We have Anand Tandon joining us on the fundamentals of the market. Anand, any new idea that you have managed to scout for in this kind of fall that we have seen? Because a lot of individual names, whether from PSU basket or other baskets, have seen quite a bit of correction over the last couple of weeks. Anything that you've recently added?
Well, my stocks and selections are usually not based on momentum. So obviously the ones that you've seen fall the most are the ones that have been going up the most and have probably reached levels which have not been seen in the past. I think there is perhaps not that much upside even now from the PSUs. They are pricing in a kind of growth rate which for the most part will be difficult to maintain over a really long term. The valuation reflects that they will sustain at these levels. uh, I I would focus more on places where the upside has not been so high and where the market has been a little boring. And companies like Dabur, for example, have actually reported reasonable numbers. They're not exactly cheap, but then among the whole sector, they have also they have perhaps one of the better outlooks going forward. So those are the kind of stocks that I would be looking at. That is not a recommendation, but it is to my mind in the current risk return. It makes more sense to look at those sectors.
Okay, the one stock which has really been, catching everyone's fancy from the word go today has been GMR Airports. It got included in the MSCI February Emerging Market Index and quite an unusual suspect at that. That stock, of course, holding up well in the green, a good solid 5% move coming in. In fact, let's see the year-to-date and month-to-date chart as well for GMR Airports, because it's been quite a significant bump up that the stock has already seen Anand, I don't know how closely you're tracking GMR specifically, but needless to say, what we witness at airports and the kind of, rush one sees on a daily basis, very few, limited pockets to invest in. GMR would be an obvious one.
Well, if you are looking at airport infrastructure, GMR is certainly something that one can look at. But the Adani group is actually the one which is under regulations in a manner which was not intended in the overall concession, but now includes passengers having to pay for access, etc. So I think you will see a steady growth because the shopping part etc. has not yet been has not been fully exploited, and I think that is the part that we will continue to see. GMR in particular has the advantage that in places like Hyderabad, for example, they have a huge amount of land, and they have managed to sign up a few very interesting contracts, for example, in terms of MROs and so on, which if it would come for fruition, will actually provide some significant upside.
Take on GMR Airports, yes, Adani would be a good play on that area as well. But a couple of other stocks which are in focus on account of news flow. MCX, of course, there was that delayed trading. It was going to start at 10 a.m., 11 a.m. and then finally it resumed trading at around 1 p.m. The exchange did say that it's not a technical glitch, but maybe some back-end error which was there. But nonetheless, that stock is in focus. And now, of course, we had a colleague Ankur talking about how there could be a potential levy or penalty that might come, but it will all depend on the findings of the root cause report that they are already looking at. The other one is, of course, Tata Motors, wherein my colleague Sumit had joined us to talk to us about how they have cut the prices on certain EVs from anywhere between 70,000 rupees all the way to 1.2 lakh rupees. So that's something which is coming in as a good news for consumers as well. Let me first take it across to see Rudramurti to get a sense on the charts of these two companies, MCX as well as Tata Motors.
See, a word on Tata Motor having made that high towards levels closer to 940 zone, it is just seeing some amount of profit booking. But the chart patterns are very, very strong. So any dip to levels closer to 880, 900 zone, I will be a buyer in Tata Motor and use dips, but not at current levels, closer to around that level of around 880. I will be looking at buying Tata Motor. But MCX, if you see last 2 days of chart pattern, definitely it is showing signs of weakness. And yesterday, if you see, the price action continued with today's price action on the downside. Yes, the stock can come down and test levels closer to 3,000, 3,050. So I will definitely look at selling MCX on any rise and buying Tata Motor on dips.
Still in the thick of earnings, and tomorrow you've got M&M coming out with its numbers. I don't know if we can take it across to Snehi and get a sense of what the ET Now poll is actually penciling in. We will get her in just a short while from now to try and understand what the market is pricing in from M&M. Having said that, it's really the usual suspects which are constituting the market today, both on the upside and the downside. We were just flagging off Markson's Pharma. That's really been on a tear after its numbers. The EPS growth itself was that of about 18%, EBITDA jump up of a solid 73 odd percent as well. And then All Cargo, which has negatively surprised, so the stock is down about almost 3% after its numbers. But time for an ET Now exclusive, and since we were on the subject of ports, Adani Ports is close to acquiring a controlling equity stake in Gopalpur Port, which is owned by the Shapurji Palunji Group. Anurag Joshi, my colleague, is here with exclusive details. Anurag, what are you picking up from your sources?
Yeah, so Adani Port is said to be close to, and it's in the final stages to acquire Gopalpur Port, which is controlled by the Shapurji Palunji group. Now talks between Adani Group and Shapurji have been going on in the recent months, and now the transaction has reached the final stages, and close of the transaction is expected as early as this month. Shapurji Palunji had bought Gopalpur Port in 2017 from the Odisha government. They bought a controlling equity stake. They own 56% in the port facility in Odisha, while the remaining is held by a company called Odisha Steve Doors. And in the past, in the recent years, Shapurji Palunji Group has been looking to pare its debt at the group level by looking to monetize or to sell some of its assets. So this sale is also a plan towards that purpose. And now to give you a breakdown about the Gopalpur port, it has got an annual cargo to fill in the gaps in eastern India where it already has a presence, but this is a stretch between Andhra Pradesh and Odisha, and this is one of the key ports which is like very useful for the logistic of coal. So this could be a perfect fit for Adani Ports.
Adanis have always been on the lookout to increase their portfolio of ports, and this could be a good fit coming in. Of course, been much talked about already, so the important thing would be to watch out for the valuations. But the stock is reacting to the story, and we are seeing a perk up on that stock. But time now to go across to Sharad to get a sense why Redington India is in focus. Sharad, that stock is up good 6-7%, no incremental news flow. What are you hearing from the dealing rooms?
In focus is Redington India, and what we are hearing from the dealers is this cash market stock has been seeing a strong buying coming in the month of February itself. Over the last two trading sessions also, the counter has been working with strong volumes, with almost volumes coming at almost 6 times its 20-day average, and HNI buying recorded across various counters. Now importantly, Rashi Peripherals, its peer is expected to get listed tomorrow, and Street is expecting this is a valuation catch-up as well. Now if you look at the FY25B valuations, Rashi Peripherals, it comes in at almost 13 times, while if you compare it to Redington India, it's coming in at almost 10.5 times. If you look at the numbers overall, the Q3 numbers were weak for Redington India, but the company has given two important statements going ahead. First is, of course, they are reducing their risky exposure to the Africa business, and also the brokerages are bullish, especially as a new management has taken place, and this could be a re-rating trigger for the stock. So importantly, Rashi Peripherals listing will also be there, which will be coming in tomorrow as well, and that is why a valuation catch-up is happening for Redington India.
That pack with huge losses coming in for some of these individual names. While RVNL today is perking up about almost 6%, it's also lost 5.25% in this week net total. In the last 1 month though, of course, it's been, or year to date, it's been seeing dizzying heights, and I'm not even comparing or stacking up the last 52-week performance here. It's emerged as the lowest bidder from Madhya Pradesh, for a contract which is about 106 odd crore rupees. And that's the quandary, right, Anand, when it comes to some of these railway names. I mean, you could debate that, yes, they've run up ahead of their fundamentals, but the auto inflows as well coming in on a daily basis is sort of puzzling on whether or not, one can continue to hold on to the positions, and there may not be any need to profit take.
So profit and valuations is always in the eyes of the people. The point is that the growth rate that you are looking at is going to be steady. Just because, let's say, your order book has doubled doesn't mean the capacity to execute has doubled as well. So typically, you will find most of these companies will grow, let's say, late teens maybe between 15 and 20% year on year, despite the order book. Even a company which is in the private sector, like Siemens, for example, has an order book which is perhaps 2.5 times their sales, but their growth rate that we are looking at is still going to be in the 20% range. So engineering capacity is not something that you can suddenly build up and start expanding. In fact, even 100 order for example, the Vande Bharat train, you had to set up a JV with a Russian company to be able to expand your capacity and build on it. The good thing is that you can expect that these orders will for a long time. I mean, Siemens, for example, has an order which will run into the next 10 years in execution and 30 years or more in servicing. So some of these orders that many of the rail companies will get will run for a long time. The point is you paid for much of it right up front. And from here on, the delta will require you not just to have orders, but to have earnings growth, which is going up. RVNL is a very good company, very well managed company with a very aggressive and result focused management team. So it's a good place to be generally in. But I would like to flag that most of the PSUs, the changes in the management are minimal. What the order books are definitely great, but that doesn't necessarily translate into a kind of 800%, 1,000% growth in terms of the stock price that we've seen in some of these cases.
Take on some of these railway stocks and the kind of moves that you're seeing there. Just pull up the stock of Redington because that's up 8%. Earlier in the day, the company had informed exchanges that they're looking at 8%, and UPL is the other one which is showing smart traction. That stock is up around 4 to 5% in the trading session. Of course, has been beleaguered on account of earnings and the other cuts that we have seen. But for today, maybe there is some sort of buying coming in at lower levels. So that stock holding up with a gain of around 5%. But M&M is the stock to watch out for after Eicher Motors. That auto company will be reporting its numbers tomorrow. What are the expectations? Let's go across to Snehi to get more details. Hi, Snehi.
Hi, so well, yes, M&M all set to declare its quarter 3 numbers, and we're expecting a rather mixed set of numbers for M&M, but nonetheless a decent set is what is expected. Revenue is expected to grow at 17% on an annualized basis and 4% on a sequential basis, roughly at 25,320 odd crore rupees. Margins, however, are expected to remain rather flat on an annualized basis, but margin improvement on a seasonal basis is largely to be led by operating leverage. And profit after tax is also expected to grow 23% annually, but is expected to shrink 23% on a quarter-on-quarter basis. When we talk about volumes then, auto volumes are expected to be up 20% on a year-on-year basis, but down 0.3% when it comes to sequential performance. And tractor volumes are expected to be down 4% on a year-on-year basis, but up 13% sequentially. So a rather mixed set of numbers expected for M&M. What are the factors at play then? The strong volume growth in autos could be seen because of improving supply chain as well. Tractors declined on a higher base of last year and uneven rainfall, so that segment could be seeing some trouble. But better net pricing will mostly be offset by an adverse mix and higher marketing spend. So we'll see what the bottom line actually comes down to. And the key factors to watch out for will be the tractor demand outlook, what the management has to say on that. Any guidance cut for the tractor industry growth, that will also be one key area of commentary to watch out for, and any open bookings in the SUV segment. So our eyes will be on all of this, and this is largely what the street is penciling in when it comes to M&M's quarter 3 numbers.
Coming in on what to expect from M&M right now. Naresh, let's revisit some of those auto stories because these stocks have also been on your radar. I mean, be it a Hero MotoCorp, Maruti, or for that matter, Tata Motors. Naresh, you got to unmute yourself.
So we've gone through this phase wherein we started off with Tata Motors, TVS Motors doing well. Then we had Hero MotoCorp and Bajaj Auto doing well. And now at current levels, the best play right now is Maruti, which has the next rotation in the stock has gone through a phase of consolidation. The stock was at 10,000 rupees back in 2018, and it was at 10,000 rupees in 2024. So 6 years of zero return. And that has been showing relative strength for the last couple of weeks also. So that would be the best bet out of the auto pack. And then we would look at Mahindra and Mahindra once the numbers are through. If the stock can break out above the recent highs of 1750, then maybe Mahindra and Mahindra could go into the list. But as of now, in auto names, Maruti remains the top pick.
Right. Okay. That's the take. coming in on some of these auto charts. In the meantime, while Hindalco continues to struggle, M&M as well is down ahead of its numbers. ITC, Infosys, DRL, Bharti, you're not really seeing a whole lot of a move come in from any of these names. Reliance, of course, goes strong. SBI as well holding up 0.5%. And some of these private banking names, not quite HDFC Bank, but ICICI Bank, Axis, they are going pretty strong. Rudra, let's revisit the charts of an ICICI Bank as well as Axis. And do you think the strength is going to continue? And finally, do we have a disconnect from HDFC Bank?
See, for me, if I have to pick the best among the private banks, surely it will be ICICI Bank. But still, for me, SBI, stocks like PNB, these are much, much better bets to me. And even now, after the correction, what we have seen in public sector stocks, for me, public sector banks still offer good valuation and good comfort. Even on chart, if you see, for me, SBI is the best buy even at current level. No doubt we had a very big rally on the stock from levels closer to that 635, 640, and non-stop it made a move towards that 725 zone. Now the stock is making some small correction. So any dips in SBI for me is a great buy. Even at current market price, I'll be a buyer, or any dips to levels closer to those levels of around 680, 85, I'll be buyer in SBI. PNB also looks very good for me. Canara Bank is also a good stock to buy. So I will still look at PSU banks rather than private bank. And in private bank, my top pick will be ICICI Bank.
Taken. Nuresh, what's your sense on the charts of UPL and NLC India?
So UPL has seen a very large correction. The stock is down from 850 levels all the way down to 450. The stock was last available at these prices back in 2020. So out here, today's recovery has been good, but technically till the time we don't break above 520, the trend does not change. So at 470, 480 levels, the risk reward is almost the same. Downside is similar, upside is similar. So that would be an avoid as such for the near term.
Taken. So that's a view coming in on a couple of these buzzers. But separately, Anand, what's your view when it comes to the capital good names? Because if you look at the earnings from the likes of Siemens, BHEL, even the electronic manufacturing companies, Sirma SGS, Dixon, Amber, they were all disappointing. There was no fireworks there. Do you think it's just the nature of the business that quarterly earnings are lumpy and you should take a longer term view? Or given the valuations, there is a case of booking some profits in some of these capital goods and electronic manufacturing companies?
I think there is a difference between the two. With capital goods, at least there is some reason for it to be lumpy. But for electronic manufacturing, it's a steady state business. There is no particular reason why you should be having great lumps in terms of your revenue flow, especially except when you are adding, let's say, a new client or a new client. So to that extent, most of the lumpiness should be on the upside. If you're losing something, obviously it's not good. If you are talking about BHEL, you would be doing partial booking of revenues during the course of the project, but you could still argue that there will be some amount of calendar effect coming through in some of these capital good companies. So no really lumpiness is not the reason. As I was saying earlier, just because you increase the order book doesn't necessarily mean that they will make lots of money. In the electronic manufacturing companies, you have to remember the margins are really, really thin. I mean, most of these companies operate at a low single-digit kind of operating margin, and therefore, just because the top line is going up big time doesn't necessarily mean that the profitability will increase. Because at that level of margin, it is difficult to squeeze out some of the other costs also. So no doubt, as size increases, they will have a slight improvement in operating margin, but there is also the issue of when they can realize their PLI revenues, etc. So overall, I think many of these companies have run ahead. In fact, actually speaking, like your earlier analysts were saying, in my mind, banking is probably now one of the cheaper ones, and private sector banks in particular, especially, are quite cheap compared to many of the others. SBI, no doubt, looks very cheap as well. So rather than looking at things like capital goods, etc., it may be worthwhile for an investor to look at these.
Your list?
See, I have SBI as my buy call for BTST, looking at initial targets of 735, and eventually for a positional trade, I'm looking at 800 in SBI with a stop loss of 695. Wipro also looks very strong to me, and one can look at buying Wipro. looking at targets of 525 for BTST, and positionally also looks very strong. Keep a stop loss of 495 for this long call on Wipro.
Let's spend a minute more on the numbers of Bosch because it's a very strong set actually. The net profit is up 62% on a year-on-year basis, has come in at 518 crore. The revenue is also up 15%, and that's coming in with an addition of a margin improvement as well. The margin has come in at 13.8% versus 11%. To add to that, there's a sweetener of the interim dividend as well to the tune of 205 rupees. So it's a decent number coming in as far as the interim dividend is concerned. And the management commentary is also quite positive. Mr. Guru Prasad Mudlapur, who's the managing director at Bosch, has said that increased demand for vehicles has resulted in robust growth, and they are expecting that with a sustained focus on localization in the mobility space and beyond, they are optimistic of the future and committed to delivering technologies and solutions that elevate the customer experience. And even in terms of the breakup that the company has provided for different segments, whether it is the mobility segment, whether it is the segment coming in with respect to beyond mobility as well as two-wheeler as well, there is a decent growth across the board, and they're talking about improvement going forward as well. So that's about Bosch. But if I can come to you, Naresh, for the BTSC trade, and also if you have a view on the charts of Bosch.
So Bosch have been recommending from the time it broke out about 22,000, 28,000.
One of the other sectors that didn't do well today was in terms of the Nifty Auto, then that didn't manage to hold on to any sort of a gain there. Nifty mid-cap, small-cap underperforming the benchmark indices is how the day is closing at as well. Hindalco continues to be a bit under pressure even as of now, and this is despite the standalone numbers being in line. Slight bit of a recovery is what we saw from the day's lowest point of around 15% fall, but you're still being under pressure. Other than that, a lot of individual movers in trade on the back of earnings, whether you look at a Bombay Burma, KIOCL, Bosch, Arvind Fashions, as well as even Eicher Motors reported its numbers, where the operating performance was strong, but seems like Eicher Motor is going to be closing the day a bit flattish on that note as well. MCX continues to end on the red note, despite the technical issues that they were facing during the get-go of the day. Yes, it was solved at 1 p.m., but yes, still MCX managing to close on in the red is what we are seeing there. Other than that, let's keep an eye out on numbers for Borosil as well. Strong set of numbers. Borosil is going to be closing with gains of more than around 10% as of now as well. GMR Airports, that was a surprise entry in the MSCI index, and that is something that managed to hold on to the gains since the get-go, as of now also holding on to gains of 5% as well. Let's look at RVNL and all the railway stocks. They are buzzing in trade because RVNL actually won an order. After that, we've seen, the rub-off effect even coming in on railway stocks today. So all these railway stocks are also managing to hold on to strong gains as well. But yes, that's how the market was looking like, And today, as of now as well, UPL2 managing to actually close with very good gains. And when you're looking at it in terms of the mid-cap names that have seen a bit of a move today, IRFC, NHPC, Delivery, Petronet, HDFC, AMC, all of them have been buzzing in trade as well. But yes, that was the market today. Nifty closing with gains of more than 100 points.